One.
Hey everyone, Chris with Due Diligence Investors. So going back through, it looks like ticker symbol BGFT that we were looking through last night had a another big increase in share volume. So I was looking back through this one again, doing a little bit more due diligence, trying to find out if it's something that I'd be interested in getting into, or trying to figure out really more what's causing this run. Looking at the chart, it really broke out with this increased volume. 322 million shares traded today. So I was looking through OTC markets. It didn't look like there were any new disclosures filed. I didn't see anything new with the Secretary of State of Nevada as far as new shares being issued or anything like that. So that's still what's listed on the OTC markets of 4 billion shares authorized is still the accurate number with the Secretary of State of Nevada. I was looking through some of the 8Ks that the company filed. Looks like back in December 2017, the company signed a binding letter of intent to purchase all the equity interests of in East Glacier Park Enterprises LLC for $6 million in the form of convertible Series A preferred stock. However, it does look like they subsequently canceled that. So it looks like on February 9th, 2018, the board of directors of Bigfoot Project Investments terminated the December 9th, 2017 binding letter of intent to purchase that interest. I also found there was a piece of news from the Missoulian.com, uh, basically talking about the deal falling through. It says no Bigfoot here. East Glacier businessman says 100-room motel won't include Bigfoot museum. Talks through that partnership didn't work out for various reasons. Stewart said Stewart is the owner of the East Glacier properties. Wednesday from his Browning area home. The motel project is still moving forward. It just won't include the Bigfoot Museum. We have a different group of investors now. Doesn't say specifically why the deal fell through, although it does hint towards Bigfoot Project Investments filing only $292 in cash, and the fact that the company is filing that it's uncertain about its future, has no ability. Let's see here. There is significant uncertainty projecting future profitability due to our minimal operating history and lack of guaranteed ongoing revenue streams. So when you're selling $6 million $6 million in secured shares of a company, when you're selling this much property, you want to do. I understand where Stewart is coming from, or you want to make sure that your investment is going to pay off in the end. And it doesn't seem that Bigfoot Project Investments can afford this kind of a purchase at this point in time. There was another 8K on November 30th. Bigfoot Project Investments entered into a non-exclusive corporate financial advisory agreement with a financial advisory firm, Vayo Partners LLC, a Delaware limited liability company. Pursuant to the terms of the advisory agreement, the company pays an initial engagement fee of 8 million in restricted shares of common stock of the company, and then a total monthly fee of $10,000, with at least $3,000 being paid in cash. and the remainder being paid in unregistered and restricted securities. Bearing an appropriate restrictive legend, the advisory agreement also has an acquisition fee equal to 8% of the enterprise value of any acquisition that is introduced to the company by Vayo. That is a very, very expensive way to get an advisor. And the fact that it's costing the company $10,000 a month, 3,000 of it needing to be paid in cash, which the company doesn't even have $3,000 in cash coming in each month. That means that they're going to have to be selling shares of the common stock in order to pay this, or taking on more debt in order to pay this $3,000 a month just for a financial advisor, which I don't believe this company, Bigfoot Project Investments, is really in need of a financial advisory firm. They don't really have enough assets, financial assets, to need an advisor for, in my opinion. Uh, I was also doing a little digging into this Vayo Partners LLC. So I looked through the Delaware Secretary of State. Didn't get a lot of information off of that, but this is Bel Air Group Incorporated, which found out Jerem Heaps, the person behind Vayo Partners LLC, is also the CEO or owner of Bel Air Group Incorporated, which he filed a Form D looking to sell some shares of this Bel Air Group Incorporated. Uh, it was founded in 2016. He filed the Form D in 2018. I believe it was February 2018. If I can move this down here. Yeah, February 14th, 2018 is when he filed this Form D. Let's see. So total offering amount $250,000. Total amount sold $0. Selling it to unaccredited investors, equity. No revenues in this Bel Air Group Incorporated. So if he had the company since 2016 and hasn't found a way to come up with some revenue as his own company, not sure how he's planning on helping Bigfoot Property and Project Investments gain revenue in their company. Looked at Jerem Heaps, doesn't even show the Bel Air Group Incorporated on his LinkedIn. Uh, doesn't talk about anywhere else. Obviously, you can see he lives in Summerville, South Carolina. Current Vayo Partners doesn't list Bel Air Group Incorporated as a current. Look at the SEC form filed. Summerville, South Carolina, apartment 813 is Bel Air Group's address, as well as Jerem Heap's address, 325 Midland Parkway, apartment 813. This is a form he filed with SEC.gov. I was looking through Bel Air Group Incorporated, September 23rd, 2016. Still, as far as I can tell, still a good company since he filed the Form D with the SEC just 5 months ago. Anyway, just a little more due diligence that I came across. I mean, everyone is the company that they keep, or they're associated with the company that they keep. So, yeah, I'll be doing more due diligence on this one in the coming days. But everyone have a good night.